Hey guys, welcome back to the channel. Today is October the 29th, and are you looking for a great strategy, one that is easy, that will allow you to day trade every day and quickly scalp the markets and make good money? Well, I'm going to show you a scalping strategy that I actually use daily, and I talk about this in the videos, after videos, after videos. But the reason why I'm going to continue doing so, guys, because I want people to understand this strategy, kind of grasp it, really understand and what I'm talking about, because I want to see people, kind of have a turnaround when it comes to the trading and be successful in the same sense. And how I trade is so simple. And I also want to kind of talk about the gap fill that I received a couple comments on, people stating about when you talk about gap fill, you're talking about the untested areas. And I want to address that as well and explain to you about, the gap fill, the gaps that price may leave when it's quickly moving away from an area. And I'm not talking about like those areas where there's void or invisible areas where price may jump, whatever case you may see, skips in the market, whatever case is. I'm not talking particularly about those gap fills. I'm talking more so about those areas where price, like I said, kind of quickly moves away either up or down, and creating, especially when it creates an area of supply or demand. So we'll talk about that. But yeah, let's talk about the scalping strategy that I use. It's very easy, and I'm going to break it down. And, if you're a full-time person that has a job that actually works, and this is something that you can use, if you're actually trying to, make money part-time on the side, or maybe you're actually looking to go from, shifting over from your full-time job to making trading a full-time career, which I talked about that as well in the video, my own personal opinion about that and how to go about doing it, because I once did the same thing. But here's a way, whether you work full-time or part-time, to be able to scalp trade the markets, especially the future markets, and make money, because that's what I trade, is the future market. So we'll talk about that now, and I'm going to show you a couple areas or setups, whatever the case is, because I trade, and the way I talk about how explaining the way I actually use my strategy is more so from pair charts for beginners, because it actually, like I said before, it gives you more confirmation. And then once you work your way up and become more experienced, then, if you notice to where you can actually trade from one chart, there's no problem doing that. But you always want to make sure that you're kind of moving in the direction off the higher time frame. And I talk about that as well. You want the higher time frame confluence to kind of put you or show you the direction of what the market is trying to do, and trade with the market. Don't trade against it. Now, you may be asking, well, I make money, or I'm successful at counter trend trading. Some people are. They're good at counter trend trading. And I'm good at doing it as well. But you must understand those counter trend trades are kind of short-lived, kind of intermediate. They don't last forever. And you have to know exactly where to get in and get out at, and also be very mindful if the market's in a downtrend and you're looking to trade against it for a quick scalp or a counter trend trade, and you want to go long, you must understand the overall direction or the power or the market at the time, maybe trying to make lower lows and lower highs and continue pushing lower, and you're looking to trade against it and make a quick long scalp, whatever the case is. It can work. I do it all the time, but you just must also be mindful of those areas where price is going to halt at, and take your profit, whatever the case is. So let's jump over to the charts now. I'm going to show you a couple of examples, especially yesterday, and a couple other examples, whatever the case is. But pay close attention to those areas I'm talking about when it comes to gap fill, because I want to kind of hit home at that today so that people understand, because I did get a couple comments asking whether those areas, those untested areas in the market that you're looking at, that when you say that there could be a higher probability setups. Yes, but I also call them gap fills as well. So we'll talk about that, and I'll show you a couple examples. First, the ones from yesterday, and we're going to look at the well, first of all, let's take a look at the 60 range chart. Now, if you're new to watching my channel, I always talk about, scaling down. And that's the way I do. I look at the higher time frame. It doesn't matter what time frame you use. You may be, a swing trader, position trader, style trader. I'm a scalp trader, guys. So if you are interested in scalping, that's the way I actually trade. Does the strategy I use work if you're a swing or position style trader? Sure it will, but that's not my style of trading, so I'm not going to touch and speak upon that. But you just have to understand there's more risk involved in doing so, and there's lots more swing and pullbacks because you're looking to trade from higher time frame charts. So you must understand the swings are going to be a lot greater. The market may not just quickly move in the direction as soon as you jump into it off of a higher time frame chart. It may be great pullback before it moves in that direction. So that's why I'm able to profit and be successful trading each and every day, and able to manage my trades even tighter. You know, I don't like big pullbacks, whatever the case is, and I don't like trading that way. So scalping allows me to really zoom in and redefine my entries and to know exactly where I need to get in and get out at quickly, and then look for the next setup. And it provides lots of setups as well. So understand that scalping is a great way to trade. If you know how to trade quickly, make your money, look for the next setups, there's plenty of opportunities, okay? But starting off with a higher time frame chart, if you're a newcomer, first time viewer to the channel, and if you're someone that's already watched the videos and know how I actually trade, or you're simply trying to pick up some more information, whatever the case is, continue watching the video, because I'm sure there are individuals who watch my videos back to back to back and spend time watching hours upon hours of videos that I actually post. They are learning or understanding how I trade, and trust me, if you go into our Discord community, there are individuals that kind of picked up on how I actually trade and doing successful. It's helped them out in their journey. Probably gave them more of an edge to actually trade and turn their trading around, and they can attest to that on the Discord. If you ask, simply go over there and ask, whatever the case is. And there's people that are still understanding and going through the process of understanding how the strategy works, but they're getting there. So let's talk about it. Okay, I don't want to kind of keep rambling on, but looking at the higher time frame. Again, like I said, you want to follow the direction of the market. And yesterday, or over the last several days, we were making these higher highs and higher lows. Now, what does that mean? We broke a major area structure right here. And from that point, when price started making these higher highs and higher lows, you have to understand the direction of what you should trade once price starts to break a major area structure off of a higher time frame chart. And being that it broke this major area structure right here, you saw this big swing to the downside. This was a big area structure. It broke structure right there at 38.20. And once price does that, then you have to shift your mind from more so looking at when price is making these lower lows and lower highs. But once it breaks a major area structure to the upside, then you have to say, okay, I'm no longer looking for shorts. I'm looking for long entries. So that's where I was. Once I saw price break this area of structure, which primarily broke it on the, I guess the 25th or 26th, if you look at the calendar, but looking down here, looks like it may have been around the 25th. But it broke that area of structure. From that point, my mind shifted to actually looking for long entries. But what happened, it was kind of short-lived in a sense. Price turned around. It broke an area of structure here. So once price starts break structures on the higher time frame, you want to shift the way your thought of which way you should trade. So it broke structure back down to the downside right here. Once it breaks that area of structure, my mind shifts from going from long entries back to shorts, right? Okay, so on pullbacks to areas like this where we have supply on the higher time frame, I'm going to scale down, and once price taps into areas of supply on the higher time frame, what I want to do at that time is scale down to my lower time frame chart and then look for structure breaks, pull back to areas of supply off the lower time frame, and then boom. If I get the execution, or meaning that I get the rejection, I'm going short. So, but what happened here is yesterday the market kept climbing. It kept making higher highs and higher lows into the session, but it really didn't break the top end of this area of resistance or structure until towards the close of the market yesterday, somewhere after 1 o'clock. Okay, 1, 2, going forward, whatever the case is. But prior to that, again, we had this breaker structure right here at 38.23. When price broke that structure, what are we looking for? Because price has broken a major area structure off of the higher time frame, the 60 range chart. It could be a 60-minute chart for you, or even a higher time frame. So however you trade, but always follow the direction of the higher time frame and then the scale down approach. Higher time frame, scale down, start looking for your entries. Now scale down means looking on a lower time frame chart and pairing two charts together. One higher time frame, one lower time frame. So what I do then is that when I notice that price is making these higher highs and higher lows, is pulling back to areas of, say for instance, resistance, okay? All right, areas of not only resistance, but supply as well, okay? Yes, supply can be resistance because it is. It's an area where price, above it is a blockade of area of a barrier, where price pushed lower and started breaking levels to the downside. So it creates an area of resistance, but the supply portion or piece of it is more so, when you speak of supply, is aggressive areas where you see selling in the market that comes out of areas of resistance or areas of support, if the market is aggressive buying. But price pulls back to this area of supply right here, okay? And we're going to look at our first entry from yesterday, or first example, I should say, because I did take a trade, I believe, out of this area or close to this area. So we'll look at it. So once I see price come back and start tapping into an area of supply, which was, let's see, I'm resting right up in this area here, okay? Right up in this area, this zone right here. Once I see that, price taps right into that, I'm going down to a lower time frame chart, okay? My lower time frame, if I'm zoning off the higher time frame, supply or demand, meaning off the 60 range chart, my lower time frame is going for me, my 12 range chart, all right? So on the 12 range chart, all right, we'll blow it up here. So this time, it was this time frame here, around this time frame right here. Let's look at it again for 60 range. 60 range is going to be a little bit different because it's a higher time frame. Yeah, let's see. Give me 1 second. Yeah, so in this zone right here, okay, this is the area of supply. This is the area, okay? So we look down, and what I noticed, and look, once I scale down, I said, oh, okay, price is tapped into that area of supply in this zone, in this area right here. So once I see price tap into that area of that zone, that's area supply off the 60 range chart, I'm going down to my 12 range chart, and I want to start seeing if there's areas of, you know, supply as well, say for instance, on the 12 range chart. Now there's two ways you can actually do this. You could mark the zone up off the 12 range chart. I mean, not 12 range, sorry about that, guys. The 60 range chart where price tap into the supply zone. Scale down to your lower time frame chart. For me, the 12 range chart. And then as well, see if price is tapping into an area of supply on the 12 range chart, which I did. I'm going to show you that. Or you can also look for a structure break. So there's two ways of doing that in a sense, okay? So what I mean by structure break is once price taps into the supply zone on the 60 range chart, which it is in now in this area, we look for a structure break. Okay, now I didn't wait for a structure break in this instance here. And what I'm trying to say is that because we were already in supply, okay, on the 60 range, you can look for a structure break. And that means step one. Look for price to be or tap into an area of supply, in this case here on the higher time frame 60 range chart. Then scale down, 12 range, look to see if price broke an area of structure, which it didn't. It pulled down to this zone right here or to this level, but it didn't break this area of structure right here, and then it turned back around. So, but I wasn't waiting on the structure break because I also noticed prior to that we were in a 60 area of supply or 60 supply area off the 60 range chart, as well as a supply area off the 12 range chart. And because I got that double means of confirmation or confluence there, I was looking to have an interest in going short because, again, we were tapping in supply on the 60 range as well as tapping in supply on the 12 range immediately, okay? And we'll look at that area of supply, okay? And right here, so, okay, this area, this rectangle box here was just this area over here, okay? Take a look at this again, guys. Give me 1 second. Okay, let's see. This was at 38.66. Okay. All right, let's see. Make sure, double check. Yes. So this area right here, okay, that's the area of supply from, I believe it was the same day. No, it was actually 27th of October, okay? So we'll go to the, let's go to the left, okay? This supply zone right here, okay? I just want to double check and make sure. But this is the area where price broke structure right here. So this marks up an area of supply. Okay, so it has supply on the 60 range, supply on the 12 range, and then all I'm looking for is a means of rejection and to go short. Okay, so that's why I had this, circle off, whatever the case is, and had this rectangle box right here. The rectangle box identify the area of supply off of the 12 range chart as well. So if you got double confluence or double means of confirmation, in off of two charts, say the 60 range, the higher time frame for me, it could be a 60-minute for you, or as well as a 5-minute chart. If you got confluence there of price tapping into supply off both of those two charts there, then that kind of gives you a double means of confluence to be able to look for a short entry, right? Also, well, let me explain this too about the gap, okay? Because people ask about this. What do you mean when you say the gap fill? All right, what I'm talking about when I say the gap fill is, notice what price did right here after it broke this area right here, okay? When it broke structure right here, all right? So there was a high sitting right here. Price pushed lower immediately, right? It rejected. It means it must have rejected some area here to the left-hand side, okay? But you must also understand we were in that area of supply on the 60 range as well, the higher time frame as well, okay? So we broke structure immediately, pushing fast down to the downside. So orders were being filled right here to go short, right? it broke through supply. It broke through support right here, meaning it broke structure. So you got structure being broke, you have supply being created, and then you have, boom, a gap right here. Now, when I say gap, I don't mean a gap to where, you know, there's a void here. You can't, where there is actually no price action taking place. I mean, you can't, you know, sometimes you'll see mark on your chart sometimes where you'll see like going from one section to another, the price may have quickly moved through a zone or moved through an area, leaving a gap, a actual physical or how should I say it, an area where you can't really see price action, whatever the case is. You know, there's no bars or candles sitting there, and price just gaps right through it, leaving a void there on the chart. Okay, this is not a void, but it's the price. It's an area where there's a what I call area to fill or a gap to fill in this area right here. What happens in this area in situations like this is the orders are being placed, you know, quickly. Banks are filling orders, institutions are filling orders, whatever the case is. And as they're filling orders, they are filling them so quick to where the price, filling sell orders so quick to where the price immediately shoots down real quick, right? Okay, because they get so many sell orders. But what happens is that not all times the all sell orders are being placed, whatever the case is, are actually transacted, meaning that they're actually filled. And because of that, you have to think like this: if they cannot fill the orders quick enough, and you should know that if the market gaps up and moves real quick and breaks that structure to the downside or to the upside, that there's going to be orders still resting there. So all you have to do as a trader, think smart and think, I'll wait for price to get back there. We got a structure break. We got a gap sitting in that area. The price is going to have to come back and fill. And knowing that there's orders still resting there, what do you think is going to happen when price gets back to that zone? What's going to happen is that price is actually going to probably reject again. Meaning there's going to be more selling activity that's going to take place, and you want to be part of that bandwagon and jump on the bandwagon there on that train and be part of that selling activity as well. You have to move like the banks and institutions, like I talked about, the big players at hand. You have to be understand how they're actually what they're doing when they make power plays, and this is the power play, even off of a lower time frame chart. Okay, again, I said we tapped into 60 area of supply off the 60 range. We pulled back to this this 12 range area of supply as well. So confirmation there. There's a structure break. You have the gap area fill there with all those sell orders coming in. They're not going to be able to fill them quick enough, especially when you see the market gap down like that real quick, leaving what this is an aggressive selling, like pushing the market down real quick. So what happens there is, like I said, when price gets back there, look for the opportunity, stay focused and mindful that there's probably going to be some more selling activity that's going to happen. So if you look to the right hand side of your chart, I'll mark that area up. Look to the right hand side. What do you see? Price got there. And I'm not going to say that it's going to be. I'm not trying to sit here and say that it's going to be once price gets back to that zone, that it's going to be a power play and price is going to significantly just rush to the downside. But you have to be mindful of price action as well, because right below that area there is an area of support. But there's liquidity resting right here. Okay, you got to understand that. And that's what the market did yesterday. I actually said this in a video yesterday. That I'm not the video, but in the Discord yesterday, I said that price is probably going to test that area of liquidity. That's how they move. Okay, when price is moving up, pulling back to that area there where there were aggressive sell orders taking place to the left hand side, where that supply zone was created right here, and it quickly made that gap right there. Once price retraces, as you can see it doing, making higher highs and higher lows, back to that zone, that rectangle area, that same area to the left-hand side of the chart I showed you, where that gap fill happened at, that gap happened at in the market, it wants to come back and fill that area of that gap, okay? And once it gets back there, you're looking to go short, all right? So when price gets back there, you got to be looking at price action, the price action activity which happened below, and see there's a support right below. Yes, there is, and there's liquidity resting right here because, like I said, at the area, I've said this in so many videos, guys. At the area or the back end of every area of supply or demand, or meaning not supply or demand, I should say this. At the bottom end of every swing, there's a low. That's going to be liquidity. At the top end of every swing, moving to the downside, which is the high there of a swing coming to the downside, there's going to be an area of liquidity just as well. Okay, so basically what I'm saying here is that price made this push up, pull back, break higher. This is the bottom end of support right here. This low right here. There's liquidity resting right there as well, okay? All right, so understand that. So when they get back to this zone here, they're going to be looking to, we know money's resting right here. We know traders probably may have put orders in to buy right here. They're coming in to stop you out right here and take your money, okay? Regardless of the fact is there's liquidity resting right back at the back end of here because people have put orders to push the market up or went long right here. So when they notice that in the market, looking at the activity in the market, they see that people have or traders have put positions in to go long here. They know the back end of this was an area or origination area where traders put orders in. They're going to come back there, take money right there, and then push the market, continue pushing the market higher. So you have to understand the moves in the market and how they actually move. Okay. So now what I want to show you also as well is that how you can actually trade. And again, remember how I said I'm gonna go back and say this right quick. Remember how I said about the gap left here? Okay, right here. All right, quickly. All right, orders being filled. It's the big players ahead in the market that are making moves like that, guys. Okay. Now, those that have been following the channel have heard me say this: untested zones, right? When I'm talking about untested zones, I'm talking about this major, powerful, or this gap right here that happens in the market where the market thrusts down real quick or thrusts up real quick, leaving, here in this case here, red candle, red candle, red candle, red candle. What's going on there? Aggressive selling, okay? And when I say untested, I'm talking about areas where there's pretty much a gap in the market that has to be filled as price eventually will come back to that area. So just when I say untested areas, and I speak about high probability zones, that's what I'm speaking on. Untested gap fills, okay? All right? Untested areas where the price needs to come back and fill that gap, okay? That means price hasn't filled that area, and there's a higher chance, a higher probability when price gets back to those zones that it's going to do what? It's going to reject it again. But pay attention to price action to see what you have below you before you get into a trade, okay? You have to pay attention. You always have to look to your left-hand side of your chart to be able to trade moving forward. So I just want to show you another example. I'm talking about these untested zones, gap fill areas. This was from October 28th, which was yesterday, okay? But this was yesterday morning prior to the market opening. Now, look what happens here. The market pushes up, making higher highs and higher lows, okay? And as it does that, it makes a high right here. Eventually pulls back, okay? Retraces back, breaking structure to the downside, okay? As it's pushing lower, all right? But be mindful of what happens here. Price moves, turns back around, okay? Starts making higher highs and higher lows, all right? And as it's doing that, pushing back to the upside, what is it doing? It's taking out, areas of resistance here or structure as well, okay? So as it's doing that, it continues pushing higher. It takes out a major area structure right here at 38.13, okay? So notice what happens right here when it does this right here. It pushed up, pulled back, broke higher, pulled back, broke higher, okay? Then it turns back around, okay, on a pullback. Break structure right here, okay? Then what happens right here? You see this major shift in the market right here where price pushed quickly to the upside, okay? After pulling back right here, all right? It pushed quickly to the upside. It broke this area of structure right here. This is an area of structure right here because price pulled back. It broke an area of structure here, turns back around, takes out resistance on this area of structure right here, leaving behind this gap to fill, okay? Gap fill area right here. Untested, okay? So there's an area of demand sitting right here. Now we're talking about an area of demand, not supply no more, okay? So supply and demand, all right? So we have structure break here. We have a demand zone, which was created off of the structure break to the upside, as well as a gap fill. Now, price has not tested this area here. Let's mark, let me show you. I'm going to mark that right quick. This zone right here, okay? It came back to it almost, right? So there's still gap in this area here. You see when price pushed up right here, leaving this gap right here with all this aggressive buying right here. Untested zone right here has been untouched yet. It's a gap area. The price has to come back, and once it taps into the zone right here, it's filled that gap as well as come back to that untested area. All right. So we got the structure break. We got a gap in the market. We got an area of demand. We have still some area to fill here. And once price taps into this area, you can be looking for a a strong possibility for price to possibly reject that area, all depending on what happens when price gets, again, it all depends on what price does when it gets back to the zone. If it once it comes back down, at some point it's going to fill that area. It may not happen the same day, it may not happen tomorrow, but eventually it will come back to this area, and you have to be mindful as price is coming back, price action, pay attention to price action, if you're going to be able to take a trade from that area. But I wanted to show you an area that so far is untested. There's a gap fill that broke structure and created an area of demand as well, which marks this area right here a high probability area of demand. Okay, all right. Now I showed you how to look for those untested gap fill areas in the market where there were major plays that took place, meaning significant aggressive selling, significant aggressive buying, right? And showed you, using a higher time frame confluence, meaning using the higher time frame where price was tapped back into an area of supply off the higher time frame. For me, the 60 range chart could be for you for a 60-minute chart. Then scaling down to your lower time frame chart. For me, it could be a 12 range chart. You could be using a 5-minute chart, whatever the case is. But you also have price tapping into a supply zone on the lower time frame, the 12 range or 5-minute chart for you. It could be whatever the case is, whatever your lower time frame is. That gives you that double means of confirmation and confluence. I'm now going to show you another way of how I kind of show in many videos that I actually where I use an EVA or I use a paired approach in a sense to where I'm looking for an actual structure break. Okay, meaning I'm still looking at the higher time frame, whatever my higher time frame chart is, and then I scale down to a lower time frame looking for a structure break. So let's look at an example of that as well. And this is something that beginners can use and starting out to really give them more confirmation when they're actually looking to take a trade. It does. It gives you that double means of confirmation for you to solidly take an entry, and you have to be able to trade it correctly. But you must understand it's not one of those type things because I'm not a swing trader, position style trader. It allows you to be able to scalp and look for multiple setups in the market and be profitable at the same time. So let's take a look at that, and that's going to be the last example here. Okay. Now I'm going to show you how you can actually use even a lower time frame. Say if you want to use like a 5-minute chart and you're trading as your just use it as a higher time frame chart. Okay. All right. Because I showed you that you use a higher time frame, like a 60 range chart or a 60-minute chart, and then scaling down to a slightly lower chart. Now I'm going to show you how you can actually look for how I use every single day, using just a 12 range chart, and I'm going to couple that with a 4 range chart, which is an even lower time frame chart. So you could possibly maybe use a 5-minute and a 1-minute chart. Okay. So let's take a look at this. Okay. I'm going to find an area on the 12 range chart. I think I have one marked up right here. Okay. This is from October 27th. All right, and this was shortly after the market opened up. It created this area of demand right here, okay? Down here at the bottom, okay? You see this low right here? Well, you see a low here. You see an area or a swing to the downside, okay? There's a low here. Price breaks up. It takes out structure right here, okay? It takes out this area of resistance at 31, 38, 31, 38, 31. Continues pushing higher. Now, what we're looking for is for price to pull back to this area, okay? Now, let's take a look at this. It does immediately pull back to this area right here, but it also pulls back to the area again around 11:45. So we'll take a look at it here at 10 o'clock where price immediately pulled back. When I say immediately pull back on the 12 range, what happened here is price pushed up, broke structure right here, creating an area of demand sitting right here below it. It pulls right back to it. Now, you could possibly get into the trade off the 12 range chart, but we're not going to pay attention or talk about that because I'm showing you as if you were a new person, a new trader, a beginner trader that was actually trying to look for a solid strategy to use using paired charts as means of double confirmation. Trust me, the more confluence you can get or understand or find in the markets using charts, the better you're going to be off and making let's say higher profits, but be more profitable and be able to be more successful in your trading. So let's talk about the paired approach. Okay, 2 charts, 12 range. I'm using as my higher time frame at this moment. I marked and found an area of demand here. All right, so price pushes up and pulls back here, but we also going to notice here at 10 o'clock to see if there was an area or how we could have possibly got in on the trade, if at all, off the 4 range. But we do already have structure break, 1. Area of demand created. 2, which is good. All right, so let's see on the 4-range chart. We'll blow that up now. First, I'll tell you what we'll do is we'll go ahead and mark this zone so we can see it on the 4-range chart. All charts. All right, now, what happened? Okay, there we go. Let's see if it shows up on the 4-range chart. Blow the 4-range chart up. Boom, there it is. The same zone right here that I just marked on the 12-range is now identified on the 4-range. So let's look at the first instance and see when price pulled back at the break of structure. And you can see that structure break as well here on the 4-range right here at the top end of 31. So let's see if price pulls back to a zone or to that demand zone off the 12-range chart. We got it marked up on the 12-range chart here. So the first thing is you want to look for a structure break on your higher time frame. For me, right now, we're looking at 12-range. Once you get a structure break, go ahead and mark that area of demand off on your 12-range or your 5-minute chart, whatever the case is. Then switch over to the 4-range chart because this is this is the next step. This is what we're looking for next. Okay? Once we get down to the 4-range chart, we're looking for another structure break, but on the lower time frame chart. Okay? All right? So structure break happened right here. Okay? But be mindful because it's the same area off of the 12-range chart, okay? So what particularly happens here is that this same area was already broken on the 12-range chart as it was here in the 4-range chart. So the two mirror each other. So you're not going to get a structure break in this exact area once you get the price, once price pulls back to it right here because it's the same price action in a sense, okay? So price broke 38.31 here, broke structure here on the 12 range, but it broke it as well on the 4 range. So in this instance here, all we're doing is waiting for a pullback to the zone, looking for at that time some means of rejection. For me, it's a candle break, and you can go long, okay? Now, what I really wanted to show you was the example here where price actually re-entered back into that zone and how you can use that as a double means of confirmation using the two pair of charts, the 12 and the 4-range chart, combined together, looking for another entry, okay? And basically what you're doing is, again, let's look at it. On the 12-range chart, now I'm going to really show it to you. On the 12-range chart, we got a structure break right here, right? And that was at around about 10 o'clock on the 27th of October. The structure break, right? As price continues pushing higher, making higher highs and higher lows, it eventually comes back down to this area, okay? Now, yes, the area's already been tested, and it makes it kind of, you know, if you think about it, like I said this before, tested areas are in somewhat not as carry as much weight or as much high probability, but that does not mean that price would not still reject those areas because you have an area of demand still sitting there, okay? All right, so when price comes back to that zone for a second time, what I'm going to do at this point here is now I can switch over to my 4-range chart. I'm going to scale down to see if there is an actual structure break that happens on the 4-range chart. So here's the demand zone off the 12 range, what it looks like, okay? Same area. We'll go over to that area here. That time frame was, when price came back to that area, was at 11:45, okay? So we'll go to 11:45 on the 4-range chart. This zone right here now, okay? Now, what did I say? We're looking for a structure break. Now that prices come back to that demand zone after a period of time, I want to see structure break, okay, off the 4-range chart now, all right? So price comes back to that area. When it comes back to that zone, to that area there, what do we see? It made that low here, tap it into demand off the 12-range chart. I say now look for the next step, a structure break to the upside on the 4-range chart. Breaks up, what do you see? Break a structure on the 4-range chart, okay? So now we got a demand area. We got price tapping back to a demand area on the 12-range chart. Tap it into demand on the 12-range chart. We're moving down to the 4-range chart. We're looking for a structure break on the 4-range chart. And now at this point here, once it's done all those things, now we mark a demand zone on the 4-range chart. Okay? We're on the 4-range chart. Rectangle. Mark the demand zone right here. That's the 12-range demand. This is the 4-range demand. Price broke structure on the 4-range. It pulls back. Once it pulls back, we just look at price action to see if price kind of broke any areas of structure to the downside where it created an area of support. It really didn't, you know. Once price taps back into this area right here, I get a rejection, either a formation of a W, kind of does that right here. Price pushed down, pull back, broke lower. It didn't. When I said break lower, it was creating an area. It was creating a W. It pulled back right here, pushed up, pulled back. And then boom, at the break at the top end of that area of that formation of the W, go long. Or at the break of a candle, go long. Where do you go long back to? Take price back up to the top right here. This area of liquidity right here at 38.34. So let's say you got in at the break here of this formation of this W right here and got in, say, somewhere around 38.31, right, and a half, okay? You take price back up here to 34 or 34 and a half, 34 and a quarter, whatever the case may be. Pick yourself up 2.5, 3 points, even off the 4 range chart, guys. Even off the 4 range chart. Even if you get a 1.5 or 2 points off the 4 range chart, that is saying something because you're talking about a lower time frame chart. It's like probably trading against a 1 minute chart on the if you trade minute time-based charts. I'm trading a 4 range chart. I trade range charts. So a 1.5, 2 points, 2.5 points of a 4 range chart is a great scalp, even off of a lower time frame chart. And that's how I do it each and every day. You know, if I'm looking for double means of confirmation and something that's gonna give you give me the edge, I'll use paired charts. You know, and going in order of that step-by-step process. Again, mark the demand zone once you see the structure break off of the higher time frame chart. Okay, then you scale down to a lower time frame chart. Look for the structure break, another structure break on the lower time frame chart. Mark that area of demand off of, once you get that demand area off that structure break, or from that structure break off the lower time frame chart, the 4 range chart, mark the area of demand. Wait for the pullback now to the area of demand off the lower time frame chart. Once you get that formation or rejection of a W, say for instance, and price breaks right above it, or you get a break of a candle, go long. Simple as that. It gives you double means of confluence, double means of confirmation, and most times the trade is going to work out for you, okay? Be smart in how you trade and understand what the market is trying to do, and I'm going to leave you guys with that today. Hopefully I've provided enough information for most of you who are new traders, who are beginner traders, who are watching this video. I hope you picked up some pointers. Give it a shot. Give it a try. This is the strategy I use day in, day out. I have plenty of videos on my channel where you can watch me live record my live recorded sessions where I trade or whatever the case is, as well as I have tons of videos packed here on the channel to where I am talking about the strategy day after day, okay? And we have a great Discord team if you want to become part of that as well. A Discord community, or I should say Discord community, not team. Discord community filled with members who are traders that are future traders. Now, if you're a futures trader, you know, that's what the community is centered around. So, you know, you can invite yourself in. I'll show you guys that community. We have well over 500 members now. A few channels set up for one, like the general chat section or general chat channel, where you can talk about pretty much anything surrounding future markets or whatever the case is. But we also have the trading floor, where that is designed for doing the session as the market is open, where we as traders come together, myself included, as well as loads of other members in the community. We talk about the markets, meaning our zones, levels of interest. We share our trade entries. So if you're looking for a great community of, you know, filled with future traders who are, you know, like-minded and we share information, invite yourself in free of charge. Just find the link down in the description portion of the video. I'm going to show you that right now, okay? Again, this is our Discord community, and we share entries, levels, and zones of interest, and it's a great community. So if you want to take part in it and join it free of charge, find the link down in the description portion of the video. Click on the link, invite yourself in. And that's pretty much all I have for you guys today in today's video. So hopefully you guys have found some value in it. Please make sure to drop a like on the video as well. If you're a first-time viewer, please subscribe to the channel by simply clicking on the red button below. Click on the bell, turn your notifications on so that you never miss one of the uploads here on the channel. And please, guys, make sure to drop a comment on the video as well. It helps out the algorithm. It helps the channel out. So drop a like on the video as well. Hit that thumbs up button for me, as well as drop a comment in the you know, down below in the video. So I appreciate you guys. I'll see you in the next video. Take care and have a great weekend.